Okay, what's up everyone? This is Scott here again with a brand new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And so what I have here, of course, is my next installment of my live option trading series where I show you all the trades and all the adjustments I made this past trading week. Now, this past week was actually pretty slow in terms of making any new trades or adjustments. And in fact, today, as you can see here, today is pretty much the only day this week where I'm actually going to do anything. And that's because, one, my work this week was extremely busy. I also work a day job, so I was not able to spend that much time monitoring my portfolio and making new trades or adjustments. And then number two, up until this morning, my portfolio was actually fully allocated. I could not actually put on any new positions even if I wanted to. That being said, however, today is the November expiration date, so I'm going to go ahead and take off a lot of my positions, and I'll show you all the calculations I do to figure out the final profit or loss on each one. And again, as you can see this morning, I already did get a head start on doing that. I took off my Snapchat position, also my Twitter position, and also in this video, I'm going to go ahead and take off my car position. This is Avis Budget Group, and then also alongside that, I'm going to take off my GameStop position. Both of these two trades here were my more risky positions on these quote-unquote meme stocks in an effort to make back some money after my botched earnings trades recently. And I'm very happy to say that both of them turned out extremely well, 100% full profits. Now, as always, before we fully dive in here, in case you are brand new, I just want to let you know that you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Okay, let's get started here. Now, normally I would show you some clips first that I would have recorded from this past week that would show you in real time the various trades or adjustments I made, but like I said, this was a very slow week, so unfortunately I don't have any clips to show you this time. But there is still a fair amount to do today, and so as I mentioned, I do want to go ahead and take off my car position. This one is a naked call, specifically at the 290 strike, and it's also expiring today. Now, this short option, as well as the short strangle I sold in GameStop, both these contracts, or I should say both these positions, are almost guaranteed to expire out of the money come the close of today's market. But as you will see, all these contracts are pretty much trading for only pennies at this point. So may as well just go ahead and take them off now, so at least you can see that. So first up, I'll go to the Trade tab and go to CAR. Again, this is Avis Budget Group, so we'll scroll down all the way to my short call option right there at the 290 strike. And there we go. As I said, the bid price is trading for only 5 cents. The asking price is 25 cents. So this option is almost completely worthless. So with that said, let's go ahead and buy it back. Bring up the buy order down here, buy one contract. And over here for my price, I'm going to come down to maybe 15 cents, pretty much right in between. Go to confirm and send. Okay, so no fills yet on that order. So we'll come back to the monitor tab and take a look at what's going on here. And there is my order on CAR. My limit price is 15. The mark price for that option is also 15, but I still might have to come up a few pennies in price. So we'll go to cancel and replace, and then I'll come up to maybe 20 cents. Go to confirm and send, let's see what happens here. And there we go, just got filled at 20 cents, very nice. Awesome, so that takes care of my CAR position. Now we'll go to GME and take off my GameStop short strangle, which as you can see here, I'm short the 190 strike put option and also the 245 strike call option. And right now with GameStop at around $212 per share, like I said, both of these contracts have a pretty much guaranteed chance of expiring out of the money. And therefore my call option is only trading for about 20 cents or so, and the put option is trading for about 4 or 5 cents. So we'll go ahead and take this one off as well. Go to buy and then strangle. And so down below, we're going to buy one contract of the 245 strike call option, which is right around here. And then also at the same time, buy back one contract of the 190 strike put option. And the mark price for this strangle is somewhere around 23 cents. I'll come up to maybe 25. Go to confirm and send. And there we go, just got filled at 23. Awesome. And then, of course, I almost forgot, we do have to come back to the monitor tab and cancel my stock hedging orders. So in the case of my CAR position, this was a short naked call position, right? In which case, I always have orders in place, which you can see here, that will buy the stock should my call strike get breached, specifically buy 100 shares of the stock. So of course, now that I no longer have a position in CAR or GameStop, I do need to cancel these orders. So in the case of CAR, we'll just go to the working order, go ahead and right click on that one and cancel. and boom, that cancels all the orders that are dependent on it. And then for GameStop, I do believe I've already canceled those orders yesterday, and yep, I don't see any of them, so we're all good on GameStop. Okay, so the final thing I want to do in this video is calculate the final profit or loss on each of these positions. And so we're just going to start at the top here and work our way down. So GameStop is up first. Let me bring up the calculator, and then I'll move this down below. There we go. So initially for this position, I sold this strangle for a credit of $846, which means if I then bought it back for a debit of $23, I simply subtract 23, and therefore my final profit is $823 minus another $2 or so for commissions. So that's very nice. Next up, we have my car position. This was a naked call, right? I sold this option for a credit of $860. So therefore, again, if I bought this contract back this morning for a debit of $20, I simply subtract 20 from here, and the result is a profit of $840. Very nice. So those two trades are very easy in terms of calculating the final profit or loss on them, right? Next up, we have my Twitter position, and this one was definitely a bit more complex. As you can see, there are two orders, one to buy back a strangle, and then also to buy back 100 shares. So for this trade, this one started out as simply a short strangle where the put option was at the 52.5 strike and the call option was at the 72.5 strike. Now very briefly, if you come to the charts real quick here and we go to TWTR, let me move these charts down a little bit and then I'll zoom in. So again, keeping in mind my put strike was at 52.50, right around there. Well, for the past couple of days or so, Twitter has fallen well below that put strike. Twitter is up a little bit today, but still, it's at a price of just under $50. And so for my style of options trading, what I will do is sell options, of course, but if my strikes get breached, in this case, my put option got breached, what I will do is short the full amount of shares the moment the stock crosses my strike. And so for this trade here, as long as Twitter stays below my put strike, I will continue to hold those shares short. And then, of course, should Twitter recover and bounce back above my put strike, I'll buy those shares back for a very small loss and continue forward. And so that's why, coming back to the monitor tab here, in order to take this entire position off, I had to buy back the contracts, of course, and then also buy back the short shares. Now, these contracts were also in the December expiration cycle, so I could have held on to this one for quite some time longer. But this trade here was simply only meant to be a hopefully short-term earnings trade. And so that's why this morning when I saw a pretty satisfactory profit on the whole thing, I decided to go ahead and take it off. And so yes, because I shorted the shares once my put strike got breached, that's what actually allowed me to still make a profit on this whole position, as you'll see here in a second. So let's bring back the calculator. Now for this position, I sold this strangle initially for a credit of $289. And then this morning, as you can see here, I bought those contracts back for a debit of $472. So we subtract $472, and that means so far I'm down by $183. Now also there was a time where Twitter was bouncing through my put strike a few times. Basically it fell below my put strike, then bounced back above it, fell back below it, bounced back above it, and so on and so forth. And like I mentioned, every time Twitter falls below my put strike, I'll short the shares, and then should it bounce back above it, I'll buy them back for a small loss. About $20 or so every time that happens. And so again, because that did happen multiple times, I did lose an additional $96. So now that means so far I'm down by $279. Now I'm going to go ahead and clear the screen here, but don't forget this number, minus 279. And so the last time that Twitter did fall below my put strike, the last time I had to short those shares, the price I got filled at was $52.30 per share. So that means I got filled 20 cents below my put strike. And then also this morning, as you saw, I bought these shares back for a much lower price at $48.64. So therefore, I subtract from this price 48.64, and that means I made a profit of $3.66 per share. Times the 100 shares, that's an overall profit of $366. And so then finally the last step is to subtract that $279 I lost from those earlier calculations, right? And the net effect is still a profit of $87. So still a fair amount below my initial profit target, but again, I was not intending to be in this position for very long, and so once I saw this opportunity to take my profits this morning, I decided what the heck, may as well go for it. You definitely can't go broke by taking profits, of course. And then finally, we have my Snapchat position. Now, this one definitely gave me a very hard time throughout the trade. I had to make many adjustments to this one because this trade started out as simply a short naked put option at the 55 strike, but this stock did bounce through my strike many times. So for example, if we come to the charts real quick here, go to SNAP and let me zoom in. So again, my put strike was right around here, 55. And as you can see, there were many days where Snapchat was repeatedly bouncing through $55 per share. Right, Snapchat has just been moving in a straight horizontal line for the past couple weeks. So therefore, as a result, to compensate for losing a lot of money from having to repeatedly short and buy back the shares, let's come to the trade tab real quick here and let me scroll up. And then again, for reference, my put strike was right here at 55. So as I was saying, to compensate for those losses, I did have to sell call options against the put option and then also continually roll down that call option and collect more and more additional credit. And then eventually, the one adjustment I did have to make this past week, although I was not able to record it, was I did have to roll down that call option one last time to the 55 strike. So therefore, in the end, I had to convert my initial naked put option into a short straddle. In which case that means as long as Snapchat is below 55, as it is right now, I have to hold those shares short. And then should the stock reverse and go back above 55, I would therefore have to buy those short shares back and then go long on more shares to cover my call option. And I do know that can definitely sound a bit complex, but again, I do have some automatic hedging orders in place that will take care of all this stuff automatically. In this case, those orders would buy those shares back should Snapchat reverse and then also go long on more shares to cover the call option as I was just explaining. So that means all I have to do is simply make more orders if they eventually run out. So ultimately, if we come back to the monitor tab to figure out the final P&L calculation for this trade, initially I sold 2 put options on Snapchat at the 55 strike for a credit of $227 each. So go ahead and multiply that by 2 to give my total starting credit of $454. Now, as I mentioned, from Snapchat bouncing through my strikes so many times, both the put strike and also the call strike a few times, the total amount of money I lost from all that amounted to $1,148. So that means so far I'm down by $694. Ouch. But then through all the adjustments I made by selling call options and rolling down those call options multiple times, that amounted to $568 of additional credit. So now that brings the net effect to a loss still of $126. Now, as you can see here, I bought back all the contracts, 2 call options and 2 put options with the same strike rate, for a total debit of $195 each. So multiplying that by 2, that means the total debit I paid to buy back the contracts was $390. So we subtract that, and now I'm back to being down by $516. Now at this point, I'm going to go ahead and clear the screen, but don't forget this number, 516. So now the last time Snapchat fell below my put strike and I had to once more short the full amount of shares, 200 shares to be specific, the price I got filled at was $54.97 per share. Very close to my strike of 55, right? And then also this morning, I bought those shares back, all 200 of them, for a debit of $53.19. So therefore, we subtract $53.19, and that means I made a profit of $1.78 per share times the 200 shares. That's a total profit of $356. And so then finally, the very last step is to subtract that 516 from earlier, and that means the total net effect, the final outcome of this trade, was unfortunately a loss of only $160. So eventually it simply became impossible to ever make a profit on this trade here, but through all the adjustments I made and making sure that I was either covering my put option or my call option should either one go in the money, through all that management, I was able to keep those losses very small to only $160. And now, if we add up all my realized profits from this week between GameStop, Car, Twitter, and Snapchat, so of course we already know what happened with Snapchat here. Now we can add to this the profit I made on Twitter, which was $87. So that cancels out about half the losses on Snapchat, a little more. And then if we add to this the $840 I made on my car position, now I'm definitely in the green for this week. And then also we have to add to that my $823 profit on GameStop. So in the end, my total realized profit for this week was $1,590. Definitely a very good week, even though it was certainly a slow week, still a very profitable one. And now also with having taken off these 4 positions, I do have a lot more free capital in my account. So starting next week, I will begin to put on more positions. And so with that being said, that's going to do it for this video. I hope you enjoyed it. And please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.